what kind of upsets me a lot about the media and TV and personalities out there, everyone's always fear-mongering. Everyone wants you to believe all the risks of being in the stock market. I feel like my job is to show you and teach you that there's more risks of being out of the stock market. And listen, every time frame is different. Some guys invest in a monthly in a 401k. Some do it for their kids in a 529. Some do it in a 403b. Long term is one thing, which if you stayed the course, congratulations. A lot of people on TV try and also try and talk you out of your long-term approach that could help you save for your retirement. But I'm not getting into that right now. A lot of people have been like, Red Dog, I got out of the market, never got back in. I never learned technicals. I believe everyone out there, but I don't really focus in on the market. Well, this is my virtual trading floor, which goes over my trades, shows all the different type of strategies that I use, from just being in stocks, using swing positions, adding my tier system. Sometimes I sell puts to get synthetically long. Sometimes I just get long calls if I'm not sure when it's going to trigger. But for compliance, there it is. Take a look at it. People follow that all day long. It helps breed confidence into what they are doing, if they agree. So that's what I'm here to be. I'm here to be the coach and the player captain on the field, as well as the offense coordinator. So if you do tune in to the 630 Club or the Dog Pound, I try and always give you guys a quick little take of the S&P cash and the Qs, which is the backbone of the market. And if you look here, we'll get right into that chart. Okay, basically this is what I want to go over, because a lot of you have all read my book. I have an ebook. Basically, it's not like a fancy book. It's an ebook. I don't even know how many pages. It goes over the moving averages. Okay, when you're in a strong market, when you're in a weak one, when you should have risk on, when you should have risk off, what approach you should be in. Portfolio approach when we're above the 21 day, tactical when the market's vulnerable. And the bottom line is this: if you look at the chart of the S&P cash, which is right here, so many things, if you read my ebook, you could have managed your process better with. If you remember coming into this week, this was mid-March, it looked like we were very vulnerable, right? Rates were going up, people weren't sure if the market could handle it. Right on this day, I think I might have reduced a decent amount of risk, saying, hey, we're below the 8 day. Then all of a sudden on this day, we're below the 8 and 21 day. Let me reduce more risk, because you don't know. If you break the 8 and 21 day, you can go to the 50, the 100, the 200 day. You have no idea where that corrective move will go. But what happened here? We wound up holding the 50 day, right? You hold the 50 day, that's a point of reference. So if you get out up here, you could have been a buyer there. Then what else happened? We did a red dog reversal. You guys know what a red dog reversal is. That is when you get below a level and reclaim it. That gives you a bullish entry or a tactical entry. So that was 38.89 right here. That was your entry. You could have been out of the stock market saying, hey, everyone's saying rates are going higher, tech is dead, Europe is closing down again. But no, you said, hey, Red Dog says if we hold the 50 day and we reclaim a prior low, we can get some long exposure. Anyway, from here, we took out the high, that prior high, showed some power, went up to a prior pivot point where sometimes you revisit a prior pivot and you get a little resistance. Then what happened? 2 inside days within the upper end of this candle. That showed bullish digestion. Okay, some people are like, oh, we're stalling. No, it's bullish digestion. And then what happened in here? Okay, then Facebook started acting better. Google perked up. Apple found a low. Amazon got above a level. The semiconductors, which are the nuts and bolts of tech, the heartbeat of tech, started to break out. I listed the SOXL, all these kind of things. Anyway, after 2 days of holding, we went through 39.83, then really powered ahead, and PS, again, 4,083. That's how it happened. We held the 50-day red dog reversal, 2 inside days, leaders emerged, you got in them, you massaged them. Hopefully today you took some off, you netted some money, and then we'll figure out where the money flows, what sectors, and just keep continuing to do it. And the way you do that is by having a process. I'm up every day at 4:45 to put together my game plan, which I formulate for Redler Premium and the virtual trading floor. Sometimes I give you guys throw a few fish in the boat with the 630 Club, which is cool. You know, I try and help the greater good as well. And if you trade real time for a living, that's how a lot of us have become friends. And that's what I'm looking for. I'm looking for friends around the world. I'm here to help. And we're going to be doing this for a long time. I know I look a little older these days. I've been doing this for 22 plus years. But how old am I? I'm 48. I got some time left. So if you want to join the team and be part of the community, you know, you're more than welcome. Anyway, if someone says, oh my God, I can't believe the market's here with the pandemic, with this, with that, with rates, say, hey, you know what? We held the 50-day, reclaimed the 21 day, broke out, and tech acted healthy. That's how we got here. Good night, guys. Just remember, below is a link to my moving average book. I think 10,000 plus traders around the world have read it, and they've had so much success learning about the 8 and 21 day moving average, which gives you guidelines to the composure of the market. I think it's very important. Take the time and learn it.